In this video, I'm going to teach you the format of SOCF and I'm going to demo a question for you. Okay, so this is the basic format of SOCF. Okay, we have cash flow from operating, and then we have cash flow from investing activities, and we have cash flow from financing activities. Okay, and then we will see whether we have a net increase or decrease in cash held, and then we will look at what is the cash and cash equivalent. Okay, how much is the cash and cash equivalent at the start of the period, and how much is the cash and cash equivalent at the end of the period. Okay, so there are things that we can start with. Okay, we always start with our operating activities. Okay, receipts from customers. So for these receipts from customers, okay, normally we will receive money from our customers via sales. Okay, so the first thing you need to look at is you need to look at the question. Okay, we have sales over here. Okay, but they didn't mention whether this is a credit sales or cash sales. So you need to look at the balance sheet to see whether there is any accounts receivable. Okay, in this case there are no accounts receivable, which means that all of these sales over here is considered as cash sales. Okay, so the receipts from customers, okay, is 85,000. Okay, because I received for my customers 85,000 in total. Okay, so under receipts from customers, you have 85,000. Okay, and this is a positive figure because this is a cash inflow. Okay, next will be payments to suppliers and employees. Okay, before that, I already mentioned that under payments to suppliers and employees, okay, there are altogether three items, which are payments to suppliers of inventory, payments to suppliers of services, and payments to employee. So you need to look at the question properly just to find out these three items. Okay, so the first item will be payments to suppliers of inventory. So we look at the question. They didn't mention anything over here. Okay, they didn't mention anything under your income statement or your balance sheet, but if you look at additional information A, they mentioned that 33,000 was of inventory was purchased for cash in last year. That means I paid 33,000 for my inventory. Okay, so under payments to suppliers and employees, the first thing you need to include is 33,000. Okay, because I paid 33,000 for my inventory. And next one will be payments to suppliers for services, which you can get it from your income statement under other expenses. If you look at your other expenses, there are few expenses over here, so you need to analyze one by one. The first one is interest expense. Interest expense has to be disclosed separately, so it cannot be in your payments to suppliers and employees. So we look at the next one. So next will be wages. Wages is a payment to your employees, so it needs to be included in your payments to suppliers and employees. But before we include this amount into our payments to suppliers and employees, you need to check your balance sheet whether there's any accrued wages. So if there is accrued wages, right, okay, if there is accrued wages, you need to reconstruct the accrued wages account just to find out how much wages have you paid during that year. If there's no accrued wages, you can straight away take this figure over here, which is 18,000. So under payments to suppliers and employees, you have 18,000. Okay, so once you put in your 18,000, okay, you need to look at other expenses again. Okay, we have rental expenses. So this is payments to suppliers of service, so you need to include this as well. Okay, so rental expense is 7,000. You need to look at your balance sheet and see whether there is any prepaid rental or not. Is there any accrued rental or prepaid rental? If there is accrued rental or prepaid rental, same thing, you need to reconstruct the T accounts for accrued rental or prepaid rental. Okay, so you need to look, since there is no accrued rental or prepaid rental here, okay, you can straight away take this figure, which is 7,000. Now we will look at the other expenses. Okay, now we have advertising expenses of 6,000. Same thing, you have to go to your balance sheet, to see whether there is any prepaid advertisement or is there any accrued advertising expense. Okay, so since there is no prepaid advertising and accrued advertising, we can straight away take this figure over here, which is 6,000. Okay, so this 6,000 is the amount that we have used and paid during that year. Okay, so under payments to suppliers and employees, okay, you have to add another 6,000. Okay, now we move on. Depreciation is not included in your payments to suppliers and employees because depreciation does not have any cash flow involved, because when we depreciate an item, there's no cash inflow and there's no cash outflow. So depreciation not supposed to be in your SOCF. Okay. Now we have done with our other expenses, and then we have an expense over here called cost of sales. So cost of sales is an expense, it's not a cash outflow, so we just ignore it lah. So these are all the payments to suppliers and employees that we have recorded, and then we need to add everything up. So we have 33,000 plus 18,000 plus 7,000 plus 6,000. So altogether we have 64,000. Okay, next we will talk about income tax paid. Okay, so for income tax paid, we need to look at the income tax payable. Okay, under income tax payable account, we are going to look at the opening balance of the income tax payable, because this is the amount that we are going to pay this year. Because this 6,000 over here is the income tax expense for the last year. So we need to take, so the income tax expense for the last year will be paid during this year. So we are going to take 6,000. Okay, so my income tax paid is 6,000. Okay, so once we are done, we are going to look at our income statement. Okay, to see anything that we can include in your statement of cash flow. Okay, so as I mentioned before, we can just ignore cost of sales because this is an expense, it's not a cash outflow. Next, we will look at interest income. So this is the income that we earn. Okay, this is the interest income that we earn during this year. We need to look at your balance sheet to see whether there is any accrued interest income or unearned interest income. If yes, we need to reconstruct the key accounts. But since there is no accrued or unearned interest income, we can straight away take this figure. So this amount here is the interest that we earn and receive during that year. So under your SOCF, you have interest received of 800. Okay. So next we will go up and look at dividends. So this is the dividends income that we have earned during this year. Same thing, we look at our balance sheet to see whether there is any accrued dividends income or unearned dividends income. So since there is no accrued or unearned dividends income, which means that this dividends income here is the amount that we have earned and received during that year. Okay, so dividends income, we will put it under operating activities. Sorry, dividends received, we will put it in operating activities, and the amount is 200. Okay, and lastly, we look at our income statement, and just now we have mentioned about this interest expense over here, which is 3,000 of interest expense. So this interest expense is the expense that we have incurred during that year. So same thing, we have to look at our balance sheet to see whether there's any accrued interest expense or whether there's any prepaid interest expense. So since there is none, we can straight away take this amount over here, which is 3,000. So this amount here is the interest expense that we incurred and paid during that year. So under your SOCF, you have interest paid, 3,000. So interest paid is a cash outflow, so don't forget to put a negative figure. And don't forget, payments to suppliers and employees and income tax paid is also a cash outflow. So whenever you have a cash outflow, don't forget to put a negative bracket over, because later when we want to sum everything up, we need to add all the cash inflow and we have to minus all the cash outflow. Okay, so once we are done with our operating activities, we add all the cash inflow and we need to minus off all the cash outflow. So 85,000 minus 64,000 minus 6,000 plus 800 plus 200 minus 3,000. you will get 13,000. Okay, so this 13,000 is your net cash from operating activities.